recent transaction in which we were representing the seller, we ended up having to cancel because of a change in the buyer's status that caused their mortgage to be denied. Hi, this is Andrew with the Andrew Smith team of eXp Realty. And it's a situation like I just described is more common than you actually think, but it doesn't have to be. So, today I just wanted to go over with you some of the seven most common things to avoid when buying a home and applying for a mortgage. So, it's exciting. You're in the market, you've found a home, you've applied for a loan, you've got pre-approved, everything's good, right? It should be. But again, there are these seven things that you would be surprised how often they occur, and they don't really need to. So we're going to run through those here. So number one, don't change jobs or change the way that you get paid. Seems fairly logical, but for a lender, they are looking for consistency. They like a consistent paycheck, a consistent way of doing things, a long, nice track record. And if you change jobs or you change the way that you're paid from a 1099 to a W-2 employee, for instance, that breaks up that consistency and it can cause a couple of flags with the lender. Number two, don't deposit cash into your bank account. So this one here is one of the ones that is not as obvious. You may have sold a car or sold a piece of furniture or sold something that you owned outright. You've got the money, so you want to put it in the bank. Well, again, it comes back to the lender. Those are harder to track. You don't necessarily have the source like a copy of a check, something along those lines. So if you've got a situation like that and you're going to be depositing cash into your bank, talk to the lender first so you can make sure that that is well documented and doesn't cause you any problems down the road. Number three, don't make any large purchases. This one has tripped up a few buyers over the years. And the loan's pre-approved. Again, everything's good, and there's a lot of excitement about the new house. So you want to go get some furniture. You want to be ready. Sometimes these items have to be ordered, and they may not come in for 4, 6, 8 weeks. But don't do it. Not until after the loan is closed. Especially if if you pay cash, there's going to be a drop in your assets when the bank or when the loan officer verifies that again with the bank. If you use a credit card or store credit, it's going to be a hit to your credit, which is going to have an impact on your loan as well. Number four, don't co-sign for anybody. So you're buying a house, everything seems great, things are going well, and then a family member, a friend, somebody says, hey, I'm having a little trouble with this car. Would you mind co-signing for me? You want to be nice because you can help them out. But that co-signing that commits you to another loan can also have a negative impact on your mortgage application. So don't do that. Number five, don't change bank accounts. There may be a situation that's arisen that gives you a want or a need to actually change where you do your banking. That is fine, but do it after you've closed on the new home. All comes back to that consistency again that the lender is looking for. Number six, do not apply for any new credit. You may have got an awesome offer on a new credit card with huge bonus of airline miles or something along those lines. You think this would be great and you're planning for the future, but don't do it now. Again, that's going to cause an additional hit on your credit report, which is going to possibly cause the lender a problem. And number seven, don't close any credit accounts. This is one that seems, so innocent, to be honest with you. You may have an old account that you don't use anymore. It's got a credit line on it of 5,000, 8,000, 10,000, whatever it is, and you don't use it. So in cleaning things up, as you're buying your new house, you want to get things cleaned up, you go ahead and close that account. Believe it or not, that can have a negative impact on your credit score, because if you do happen to have a balance on any other credit cards or accounts out there, then the percentage of the total credit you have available to you just increased because you reduced your available credit by closing that account. So again, many of these things seem really simple, but those mistakes have derailed more than one mortgage that I have seen in my experience. So best bet, keep things as consistent, plain, and boring as possible from the time your loan is pre-approved and you get your formal approval until you're actually closed and in your new home. Then you can go forward and do any of these things that are wise to do. All right, so hope that helps. If you've got any questions whatsoever, please feel free to reach out. Contact information is directly below this video.